Good day, guys. This is TGFX. Today we are actually talk about how I do analyze my trade and what I'm looking out for tomorrow, which is Monday. What I will be looking out for, what I will be expecting. Now, let me delete it. We can see a cleaner chart. So as you can see, we took 3 trades last week, so and 1 loss, 2 wins and 1 loss. So now let me move into the analysis in details. So now we do top-down analysis. So doing top-down analysis just like multi-time frame analysis, let me call it that way. So now you can see now from here to here from here to here, we can see that this market is actually trending. You understand? The market is actually, so now you can see there's a break of structure here, there's a break of structure here, there's another break of structure here. At this point now, this market is failing to take away this structure. You can see the market is failing to take away this structure. So that's telling us that at this point the market is actually ranging, and this is the lowest point here. The market has not gotten to that level. So now what do we see again here? We can see that reading the internal structure, you can see there's a break here, there's another break of structure here, there's another break of structure here, but the market is still yet to take away this structure here, which is the external structure. So at this point now, this market is actually ranging, but internally there's an internal break of structure. Internally the market is trending up. So in lower time frame this will be clearer, but this is the daily time frame. So what do we see now on the daily time frame? So judging from these parts here, this point here, this part, like judging from this place here like this, judging from this point, I don't know what's wrong with my network, judging from this point to this point here, judging from this point here, this box here, we can see that the market has been dropping with red candle. So that's to tell us that this market is actually trading bearish, which you can see clearer on the lower time frame. What do I see here now? So that's to tell us that at this point now the market came down, it created these swing points and it broke it. So there's a break of structure at this point here, there's a break of structure here. So then at this point the market started pushing up. So that will tell us that the market is downward. It's on a downward trend. So now what do we do now? So as this market is pushing up, we'll be expecting this market to come down to this neckline, which is the order flow. I call it the order flow. That is actually where I expect the market to reverse. So looking at this closely, we see that the market actually got closer to that level, and it failed to tap it, then dropped. You understand? So I'll still be expecting the market to get there and still drop from next week. So let me mark it out properly. I'll name it D, which is my daily time frame. So I will understand that this line is coming from the daily zone. So now let's move to the 4 hours. Okay, 4 hours here. So on the 4 hours, what can we see now? You can see on these 4 hours now, you can see this is actually that trend on daily. So on 4 hours, what do you see? The market is trending down all the way, breaking structures, taking away lows, and creating lower highs. So this market is downward. So at this point now, the market started what? It created a market shift here, change of character, then it started pushing up. The market has taken away this high. So telling us that this market is trying to start trending up again. So now on the 4 hours, at this point now, what do we see here? We can see that the market failed to take away the structure. Okay, it took away the structure just with a little bearish body, which is this. So now this market is still bearish. This market is bullish, and on the daily it's still bearish. So at this point anything can happen. And one thing about this strategy is that it gives me setup both for buys and sell. It depends on the structure. I trade what I see, not what I think. So looking at this point now, what did I say? At this point here now, you can see that this market has created this neckline that is yet to be tested. It has not been tested yet. So this is H4. I will name it H4. So it's coming from the 4 hours, which is H4. So now at this point here now, I'll be expecting this market to drop down to this 4 hours, then start buying. As soon as this market push up to this daily, I will expect it to drop. That's just actually what I'll be looking out for on Monday. So with whatever line you are marking out, whatever zone you are marking out, you have to understand what that zone is meant for. You don't just draw a zone and at the end of the day you find everywhere messy. So you know what you are looking out for. Do you understand? So now the 1 hour is actually the last zone, and that is actually my final zone. That is actually the main zone I trade for. I trade from. So the 15 minutes is actually where I take my confirmation. 15 minutes and 5 minutes. I take my confirmation from 15 minutes and 5 minutes. So now looking at this now, we can see that on the 1 hour, what do we see? Market is bear. I'm not focusing on that part. Not focusing on that part now. Let's look at this. Let's read the structure here. There's a break of structure here. Market has been breaking structure, pushing up. The market got to this point. It broke structure. Then what it created double bottom here and dropped. So now this double bottom here will serve as a liquidity. Push up, clear it. This market on Monday said it might even get to this point like this, break it, then create a pattern here and drop. Do you understand? So alternatively, now on 1 hour is where I focus my attention on. So on 1 hour, I'll be looking out for something like this. Let me give you an example. Something like this. Market to create. Looking out for market to create something like this. Like create. Then the market should now come. Take away this level here. Take away this place. Then tap the next zone and buy. Let me draw it. I think this one is not clearer. Okay, let me draw it very well. On 1 hour, this is the pattern I'm watching out for. The market should push up, come back, structure, push back, again, this structure again. So once I get these two break, am I expecting? I'm expecting this market to what? Take away this liquidity, then come back to this swing point, which is my order flow. As soon as the market clear this liquidity here, tap here, I expect the market to push up. So this is the pattern I watch out for 1 hour. Do you understand? So now let's go to the linear chart. You can see the market has created such pattern. It broke this structure, pushed up. You can see. So this is a zone. It created another zone. You understand? So, and it must have fair value gap. It must have liquidity, and there must be a break of structure. So those are the things I look out for. So now let's look at this. Now we can see this is created this swing point, then broke this structure here. So there's a structure break here. So this now serves as a liquidity, and market has taken away the liquidity already. Then I think market tapped this zone. There's a zone. There should be a zone here. Let me go back to. Okay, yes, market tapped this zone with wick. This happened during the NFP news on Thursday. So tap this. So this zone is not really relevant again. You understand? It's not really relevant. Though might still drop back, still respect. Market might still drop back to this zone and still respect this zone. Anything can happen. We are all speculators in the market. You understand? But for me, based on my strategy, since market has tapped this zone, sometimes I'll wait for candlestick reaction. Like when I'm taking trade from this kind of zone, I'm always very
patient to see the candlestick reaction. You know, this is good. So market might tap and leave you. So fine. This kind of zone, I'm not here to take trade here. You understand? But now, which other zone should we be watching out for? Since market has tapped this, I think I'll be on Monday. I'll be waiting for this. Is actually the neckline I'll be waiting for. There's a fair value gap here. You can see there's a fair value gap. There's a liquidity for the market to clear, and this is a neckline. Do you understand? So this should be a zone. But looking at it again, we have this neckline. We have this neckline. So and this neckline and this, they are almost parallel to each other, almost close. So I think I would like to put it this way, because this is a neckline and this market retested this neckline, making it to be solid. Then it pushed up. So since then, market has not come down to this. Take this. Only we can take this. Market can respect this. Market can also respect this. So this is actually what I'll be looking out for 1 hour. I'll be expecting the market to come down to that level. So if the market should come down, take away this liquidity here and this liquidity here. Let me say I'll count this as liquidity. If market should take away this liquidity here, this liquidity for me, market should just come, take away this liquidity, then tap this zone, either this 1 hour or 4 hours. Then I'll start looking for candlestick reaction so I can take my trade, I can buy. So that's actually what I'll be watching out for there. This is 1 hour now. So any other thing, is that market tap here, drop, or market come down to this place and buy. So that's actually what I'll be watching out for. Alternatively, if this market, if this candlestick, if this market do something like this, maybe push up, break this structure here, back again, push like this and break the structure here like this, definitely I'll be waiting for the market to what, do something like this, pull back to this neckline, because by then I know this will become a liquidity. So I'll wait for the market to what, come back to this neckline. Or if I'm taking a trade here, I'll be expecting the market to reverse from here. So this will be an area where I'll be expecting the market to tap, then start going up. So that is actually what I'll be. So but I'm not putting my hope on this. So what I'm banking on now is whatever price action market plays out on Monday. That one is for Monday analysis, not for today. So but for today, this is actually what I'm looking out for. The market should tap here, then bounce back, tap this daily and drop. So that's actually what I'll be watching out for. Then again, if you should reduce the charts, let's go to the 4 hours. If the market failed to hold here and break it, I'll be expecting the market to what, to reverse from this point. There's a fair value gap here. All this is liquidity, so this will be under zone. I'll be expecting the market to reverse from 4 hours. That's if the market failed to come back. If the price should take away this level and push and keep pushing up, so I'll be expecting the market to get to this point, then drop before continuing again. So this will be on 4 hours. This will be H4. Then let's come down to 1 hour and see if there's any 1 hour zone. You can also check for daily, but I think I'm okay with this. So on this is daily and 1 hour is almost close. So this is for the daily. I think the daily zone is here. Sometimes you see me having this. Sometimes you might see me having 2 lines like this. That's just because the daily neckline is a bit below the 4 hours. So for the 1 hour, this is actually what I'm expecting for 1 hour. So let me name it H1. So I think this is clearer enough. So this is actually what I'm watching out for. I'm expecting, let me delete this. Now I'm expecting the market to what, either go this way, respect it, then drop. This is actually what I'm expecting for. Or the market should do this, maybe from Sunday midnight, break down to this level, respect it and push up. So this is another one. Then I'm also expecting this. If the market should maybe continue upward and fail to respect this place, if the market should, let me delete this so it will be clearer. Okay, I'm also expecting this. If this market should push up and fail to retrace or fail to respect this zone, I'm also expecting the market to push up, maybe do something like this, push up to this point here, then respect it at least below, give me my 1:2. As soon as I get 1:2, I'm out. I don't look for 1:3, 1:4, 1:2. I'm okay. And if 1:3 is possible, fine. So this is actually what I will be expecting. So that's just all. That's just how I trade. So Monday, let's watch and see what will happen on Monday. So one thing you should understand about forex trading is that every strategy works. You understand? If you are using trend line, you are using smart money concept, you are using order flow, you are using my strategy, which is what this one I'm using here. Every strategy works. It has its own way of working. You understand? Some new traders will come in, they were like, market must clear this liquid. Maybe you are seeing a buy setup here based on your strategy. Someone like a new trader will just like, there's a fair value gap there. It will respect it, it will break it, it will do this. There's a liquidity. Market needs to clear this liquidity. So if you are taking your trade there, market is going to hit you out. This. No. As a trader, respect each other's strategy. That's just what I know. Respect. So respect everyone's strategy, because there's no perfect way to trade. There's no perfect way to trade. If there's a perfect way to trade, I believe by now everybody will be trading the same strategy, because everybody wants to make money. If there's any perfect strategy anywhere, everybody will be trading that single strategy. Nobody wants to be trading something that will be making him to lose money. You understand? So whether liquidity or no liquidity, fair value gap or no fair value gap, whatever your strategy, my strategy might be telling me to sell, while your strategy is telling you to buy. So follow your analysis. At the end of the day, what matters most is your discipline and risk management. You understand? So that's just how it is. Thank you guys. We hope for a profitable week. Thank you.